An analysis report that makes a very bullish case for one of these pure play AI companies, SoundHound AI. That's ticker SOUN.
And they really don't bury the lead in this report. The headline number that just jumps off the page is a massive, nearly 67% jump in revenue year over year.
Wow.
So this whole analysis isn't about hype, it's about execution.
A 67% revenue jump. You can't really ignore that. So that brings up the big question, the one we're really going to unpack from this report.
Yeah.
The stock has pulled back, so does that make this a golden entry point? Could SOUN be the most underrated AI play for 2026? Okay, let's get into the numbers.
Let's do it.
All right, so let's jump right into that revenue figure because it's really the foundation of this whole argument. The report flags Q3 revenue hitting $42.05 million.
Right, and the key thing about that $42 million isn't just the number itself, it's the growth rate. A 67.6% jump year over year.
That's huge.
It is. I mean, think about it. The AI landscape is full of companies that are, well, they're burning cash, right? They're promising amazing things, but the financials aren't there.
Proving the concept, but not the business.
Exactly. SoundHound, with that kind of revenue leap, is proving the business model. It shows their product is not just some cool idea, it's scaling, and it's making real money.
So this is what moves them out of that purely speculative startup bucket.
It puts them squarely into the high growth category, and the analysis projects this out. They think full year revenue could top $150 million if this keeps up.
And when you see growth like that, the immediate question is, what is the product? What's actually driving this? And this is where the analysis says their competitive moat comes in. The technology is something they call speech to meaning.
Right, and it's important to distinguish this. This is not another general purpose LLM, like the kind that writes an essay for you.
It's not trying to do everything for everyone.
No, it's about precision.
Yeah.
It's built for immediate, accurate task execution from a voice command. When you say something in your car or at a drive-thru, you don't need a creative answer. You need it to be fast, and you need it to be right 100% of the time.
Okay, and the report really emphasizes that this isn't just theory, it's already in the wild. We're talking about integrations into actual hardware. Specifically, they cite major automotive partners like Stellantis and Hyundai.
And that is a huge deal. Getting your AI into a car's core system is, well, it's an incredibly high barrier to entry.
They got safety standards, noisy environments.
All of it. And once you're in, those contracts are sticky. They can last for the entire life of a car model.
But the report also points out, it's not just the slow-moving car industry. They highlight hospitality too, specifically using the tech in restaurant drive-thrus. They mention White Castle as a client.
Which is a totally different kind of pressure cooker. I mean, imagine a busy drive-thru. You've got road noise, impatient people, complex orders. A general AI tool would just fail.
Right.
So that's their moat. It's not just an algorithm. It's a robust, battle-tested integration in the real world that the generalist AIs just can't match right now.
Okay, but I mean, a 67% growth rate, that almost always comes with a catch, right? My first thought is massive cash burn. Are they going to have to turn around and dilute shareholders just to keep this up?
That's the million-dollar question, and it's exactly what this analysis looked at. And the answer was pretty surprising. Despite that insane growth, SoundHound has a really strong cash position.
How strong?
They're sitting on approximately $269 million in cash.
Wow, okay. That's a serious cushion for a company this size.
It's a massive runway. It means they can keep funding their growth, keep deepening those partnerships in auto and hospitality, all without needing to go back to the market for more money right away.
Which, for an investor, is a huge green flag. Less risk of dilution.
A huge one. And it gets better. When you look at the path to profitability, which is, the holy grail for a growth stock, the signs are positive.
They're moving in the right direction.
Yes. The report points out that their operating income is improving. They're narrowing their losses as they scale up. They even beat their last EPS estimates by 0.06 cents.
So management is keeping a tight rein on costs even as they're accelerating.
It shows discipline, exactly.
And that brings us to what the analysis calls the hidden value, the thing that isn't fully baked into the stock price yet. What is that?
It's the backlog. Hundreds of millions of dollars in cumulative bookings backlog.
And just to be clear for everyone, backlog isn't just potential business.
No, not at all. This is guaranteed future revenue. These are contracts that are already signed with clients like Stellantis or White Castle. The deal is done.
But the money hasn't officially hit the income statement yet because the service is still being rolled out.
Precisely, and the analysis argues that the market, which is so focused on quarterly recognized revenue, is inherently undervaluing this massive locked-in stream of future earnings.
Okay, so let's put this all together. You have explosive growth, a real-world moat, a huge cash cushion, and a guaranteed backlog of future revenue. If all that's true, why isn't the stock at an all-time high? Why did it just drop 18%?
And that's the setup. That's what the analysis calls the golden entry point. It's the technical side of the argument. So
Right.
you're right, the stock hit highs near $13, then pulled all the way back to around $10.41. That 18% discount is what creates the buy the dip opportunity.
But how do we know it's a dip and not the start of a bigger slide?
The analysis points to the technical floor. The $10 mark is a massive psychological and technical support level. The fact that it held that line is a really strong signal.
It suggests the uptrend is still intact.
Exactly. And just as importantly, that pullback cooled off the technical indicators. The stock isn't overbought anymore. All the fast money traders took their profits, and now, according to this report, it's entering an accumulation phase.
A better risk reward for long-term investors.
A much better setup. And it's not just this one analysis report saying it. There's what you might call social proof from Wall Street.
Okay, who else is bullish?
Well, the report cites analysts from Cantor Fitzgerald, Mizuho, D.A. Davidson. All of them have raised their price targets recently.
So there's a consensus building.
There is. And the targets are pretty significant. We're seeing numbers like $15, $17, even a high target of $26.
So if we just take a middle-of-the-road target, say $16, from that $10.41 price point, what does that represent?
You're looking at a potential 50% upside. And that's an upside built on actual revenue and contracts, not just AI hype.
So let's synthesize this for you. Based on the analysis report, the bullish case for SOUN really stands on 3 pillars. You've got execution, stability, and price action. The 67% revenue growth is your proof of execution. The strong cash position and the massive backlog, that's your stability. And the 18% discount near a major support level, that's your price action.
It's a compelling checklist, but it is very important that we include the balanced take from the report.
Of course.
SOUN AI is still a high-growth stock. That means it's volatile by nature. This is, as they say, not for the faint of heart. It's a high-risk, high-reward type of play.
Understood. But the fundamentals seem to be there to back it up.
They do.
So if you believe that voice interface, real functional voice interface is the next big wave in AI, then this analysis is basically arguing that getting in near this $10 floor could be a great position for the run-up to 2026. And that leaves you with a really interesting question to think about. How deeply do these real-world integrations, being baked into millions of cars and running thousands of drive thrusts, how deeply does that lock in future growth? Does it